Hey Daniel, how you doing?
I'm doing great. How about yourself?
I'm doing well, thank you. It's been a week, but it's been a good week. So you're just hanging in there. So just doing the best we can to help clients and help the team help our clients. So I'm excited. I'm excited to chat with you again today.
Very good. I'm looking forward to it.
Perfect. Today I know we're going to talk a little bit more about opportunity zone funds, what that looks like, etc. But first, I think first we should probably start at the beginning. What do you think?
That sounds good.
So, I'll just explain real quick if it's okay, Daniel. What I've been talking to our wealth managers about, and is just making sure we're having the conversation with everyone. If they're interested in this type of topic, of kind of from the beginning of what an opportunity zone really even is,
Mhm.
because we use this terminology all the time. And just like we always tell our clients, if I walked into your job and tried to sit down and do your job and your career, it would be a foreign language, right? So it doesn't matter if they're, working at Northrop Grumman, if they're, working for the government, it doesn't matter what it is, but every every industry, every career really has its own dictionary, of words. So I just want to explain like the idea of an opportunity zone, what that looks like, why it kind of exists from my understanding, and where we go from there. And so how does that benefit a client, and how we can utilize that in their portfolio. So really quickly, I say really quickly, but it'll probably take at least 5 minutes. But an opportunity zone, the idea from all of my research and understanding is the idea that there are areas identified across the United States, geographic locations, where there are pieces of either current real estate or just property that needs to be either redeveloped, revitalized, or developed. And the idea is looking at these geographic regions is to make sure that money is flowing back into some good places to maybe revitalize some communities, things along those lines. For instance, right here in Reston, I don't know if you guys are aware of this, but the original Reston Town Center, Lake Ann Plaza, if you want to think of it that way, is actually, there are pieces of property in there that are deemed and uh, zoned as an opportunity zone. And that was done by this piece of legislation that was passed through. And if any of you have ever been over to the Lake Ann, Plaza, when Robert E. Simon developed Reston, that was the original Reston Town Center. And it's now gotten some new businesses popped back in there, but there are still several buildings sitting vacant, and it is, an older property. I'm not sure exactly the year it was built, but it wasn't built in the 2000s, right? It was built much earlier. And so looking at that property in that area, it could just definitely use some facelift, some businesses to go back in there, renovate those properties, and make sure that we're looking at rebuilding America in those sections. And so when you look at the opportunity zone legislation, and what that means is it's really real estate that's identified throughout the country, and there are tax incentives that were put into place to pull money into those areas. And so that's where this qualified opportunity zone terminology comes from. And then, you could go individually. Daniel, you could do this. I could do this. Anyone could go buy that piece of real estate in Lake Ann, for example, and buy that opportunity zone, dump their gains into it, realize the tax incentives, which I'm going to let you go through over time. And they could do that individually. But let me tell you, a lot of our clients are really busy. They're busy with their own careers, with their family, with their grandkids, with living, retirement, enjoying it. And they don't want to be a developer or a landlord. They want to enjoy their life, but make sure that their money's working as hard for them as possible. So if you're not in the boat where you want to go get a contractor and to redevelop a property and own it for 10 plus years, then there are these investment options called qualified opportunity zone funds that our clients can look at and have access to through our research and due diligence that our firm and that we do here at Clark Financial. So with that being said, will you kind of tell me a little bit more about the tax incentive side of it, Daniel? And then I can maybe, if it's okay with you, talk a little bit more about the process of what that looks like.
Of course, of course. So,
Perfect.
a prime example of a situation with a client where an opportunity zone made a lot of sense was she had a rental property for several years, took depreciation on the property every year on the tax return, so got a nice benefit there. But when the rental property was sold, right, there was a very low cost basis, a pretty substantial gain, and she did not want to write the check. So at the end of the day, we took a substantial portion of that gain. And what you can do is you can invest that gain. A beauty of opportunity zone funds is you don't have to reinvest the cost basis. You can take the cost basis out and implement that somewhere else. But
oh, great.
Typically for the gain, you put that in the opportunity zone fund. Now, you will have to pay the taxes on it at some point, but it's several years down the road. I believe it's the end of 2025 that you would have to pay the capital gains. So you defer it, you don't eliminate it, you defer it. That being said, if it's in for that period, you're going to get a step up in cost basis, right? So that's going to reduce, you're going to get to defer it and reduce it by the lift in the cost basis, okay? Now, the money is working inside of the opportunity zone fund, and assuming that does well, if you've held the opportunity zone fund for over 10 years and they sell those properties, that will be a non-taxable event, right? So that's kind of where it will make sense. Now, one thing that I'll also mention versus buying your own, opportunity zone is a lot of these opportunity zone funds, they have diversification, right? I mean,
Right.
diversification is key. So if one of the properties doesn't work out, hopefully the others are doing well. And one thing that I've noticed for the opportunity zone funds that, we have available is a lot of times it just ended up being in a really good spot. Like one of the opportunity zone funds that they have areas around Phoenix, right, which is one of the fastest growing metropolitan areas. They're Salt Lake City, because there are a lot of geographical changes where people are moving to other areas in the country, and sometimes they just happen to be opportunity zone funds. So it's great.
Definitely. And I know, I was chatting with one of our vendor development partners the other day, and we were talking about how there's changes going on now, even in real estate due to COVID, due to the changes in where people are living. A lot of people do get to work remotely, and so are they staying in the cities? Are they staying in the large expensive cities like New York and LA? Or are they migrating elsewhere? So yeah, I mean, I think it's important to be diversified because in your real estate holdings, because if you have the option to buy one office building, or you have the option to buy 10, which would you choose? I mean, it's a very it's a pretty straightforward answer. I'd rather diversify my risk. And so same thing in the opportunity zone funds, just like you're saying. That's a really good point. I appreciate you highlighting that. So like Daniel said, he kind of went through the process of one of our current clients that we just did this with. And if you have gains, and it can be on anything, it doesn't have to be on real estate, it can be on your stock portfolio, it can be on lots of different items. when it has to be real estate is if you're using that 1031 exchange, which is a totally separate and distinct strategy. That has to be on rental real estate, and it has to be a like for like exchange. So a client question I used to get a lot a few years ago was always, well, I want to sell my rental property and buy a primary residence. Well, you can't just do that. That's not a like for like exchange. There is a way you can, a strategy you can put in place to make it your primary residence over time, but it's going to take time, so it can't be immediate. So and that 1031 exchange is one of the things that's in the proposed tax law changes. So if that's something that you're thinking about, you might want to do, it may make sense to look at it doing it sooner rather than later, because another huge thing that we have to plan for and that we're unsure of is what legislation changes are going to come about. And so it's on the table now. I don't know if it'll be on the table in the future. The opportunity zone thing was a new change. It was a good change, right? So changes are always occurring. So it's really important that you're speaking to your wealth management team and just diving into the details from a financial planning perspective. It's important that your accounts make money and do what they're supposed to do. But if we don't know where we're going or how to get there, then the investments don't matter. So it's very easy to get swept up in the stock market gains right now. And it's great that we're experiencing them and we are excited, but make sure that we have long-term memory. Make sure that we're thinking about, you guys, our clients have all lived through 2000, 2008. A lot of them lived through the blips in the 80s and whatnot, and just making sure we're understanding that we need to have an all-weather portfolio, and just looking at every single aspect of your financial plan, making sure we're talking about tax mitigation. Do we have long-term care insurance? Do we have life insurance in place? I'll share personally, and this is a whole nother topic, but my dad was really sick in the end, and we wanted him at home, and home health care was very, very expensive. I'm not even going to tell you the number because you guys will all probably fall out of your chair. But it was more than $20,000 a month to get the nursing care that he needed. And that, we were blessed that he had long-term care insurance and that he had that financial plan in place. But a lot of families aren't so lucky and that planning wasn't done. So it's really important to make sure that you're talking to your wealth management team about all of these topics. Rate of return is an important piece of the puzzle, but most importantly is your total financial plan. So just making sure that you're talking to your team about it. And I'm working with our team on making sure they're speaking to you about it. So yeah, I'm excited to talk more about opportunity zones as time goes on, and I'm hopeful that we can mitigate some tax risk for our clients moving forward. And I think it's important to bring up new ideas like this and make sure that we're educating clients all the time, right, Daniel, about these new opportunities. So yeah. Is there anything else that has been brought up in the last week that you wanted to kind of go over?
That was the main thing. So
Okay, perfect. All right, perfect. Well, I think that's all I really wanted to chat about today. I know that's a conversation that I heard you guys have been talking to clients with quite a bit, especially with the upcoming, possible tax changes. So again, full disclosure, we're not CPAs. We don't prepare tax returns, but looking forward at, your tax obligation and seeing if we can reduce that in any way is important too. And one thing just to note, we talk a lot about personal finances and personal retirement. because that's a lot of our clients, what we focus on here. But Clark Financial was also founded on helping corporations. And so if you're a business owner, you know someone who owns a business, or if you have friends that are business owners, there are lots of tax mitigation strategies above and beyond anything that we've talked about today, that really, are important for corporations to put into place, whether it's a small dual member LLC or, an S Corp with, 50 employees or 10 employees. There's all kinds of tools in the toolbox, and it's just a matter of having the strategies in place. So, I think that's one thing too that, Daniel, you've come across a few times now is, some of our clients that work with us on their personal side, them saying, well, I have this business, what do I do over here? And that's, those are all strategies and knowledge that we have in our toolbox that we can help our clients with as well. So important stuff. I know not the most exciting, but making 30% on your accounts really exciting. But at the end of the day, your financial plan is supposed to be boring. It's not supposed to be exciting. Because if you want excitement, what I was always taught is, if you want excitement, then take some money out and go to the slots or something, right? So that's the goal. So, because in retirement, you want to be able to focus on your life that you want to live, and don't have to wake up every day and say, what's the stock market doing? What are my accounts doing? Looking at your statements. You want to be able to go on trips and spend time with your family, and really just do the things that you want to do so that you can have a life well lived. So awesome. Thank you so much for your time, Daniel. I really appreciate it. And I hope you have a great rest of your day, and we'll talk again soon.
Excellent. Thank you so much. It's great to see you.
So good to see you. Thank you. Thanks, Daniel. Bye.